know what? Let's. It's okay. Let's go ahead and make it go for it. So, thank you very much, Abrdn, for hosting us today for this wonderful panel discussion. As was stated, my name is Monique Morrow, and I'm an independent director on the board of Hedera. Independent means what it is. It's independent. I'm not affiliated with a particular company. So I kind of play the big elephant in the room type of role. And I'm pleased to I've known Hedera for several years. I come from a telecommunications background. So my background is telecommunications, but I used to actually lead a special group on decentralized identity. And so I'm going to go right to left here. We have Duncan. So Duncan is a senior investment manager, alternative investment manager for strategies at Abrdn, and he's responsible. You can correct me for the development of Abrdn's digital asset strategy, and represents Abrdn on our council. So that's really great. Welcome, Duncan. This is welcome. We've got my fellow board member, and also we like to banter a little bit. Scott Thiel, he's founder and entrepreneur in residence for Toko. It's an enterprise-grade tokenization digital assets platform. He's my fellow board member. I would say, I'm going to call it out anyway. He's a lawyer in training.
I'm recovered.
Yeah. And I'm really pleased to have both folks here, because this is about tokenization. If you don't know what tokenization is, hopefully by the end of this panel, you will, and you can make sure you can ask some questions here. So I'm gonna throw a few questions, and the first one is, we'll go to you, Scott. Please explain the value proposition of tokenization for enterprises. We want to know give concrete examples, because you're all working on concrete real-world examples that you both are engaged in. So, examples, concrete.
Sure. So I'm going to probably pass on. There's probably two elements of tokenization, or two different types that we're mainly working on. There are digitization of things that are already well-known, familiar, and I'm going to kind of leave that to you to a large extent, Duncan, because the journey you're going on in terms of the digitization of traditional funds and now putting them out in the digital world. So I'll maybe avoid, not avoid, but I'll leave that topic to Duncan. The other part of what we're doing is working with people who are looking to leverage this technology to create things that don't exist today, to provide access to fractional investments in or fractional ownership rights of certain things. And one observation I would make, and it's taken me a while to get there. I mean, I started Toko, I was a lawyer, and to me, this is about the digitization of rights. That's what it is. Tokenization, I think, is now starting to generate a lot of perspectives, and like everything in Web3, NFTs mean 10 different things to 10 different people, and all of these other things. The same is happening with tokenization. To me, this is the digitization of rights. And what we can put in a token is any rights that we used to be able to put in a paper-based contract. And now what the technology is doing, to your question, is what's the value proposition? Yep. Once things are in digital form, you can do different things with them. The analogy I love to talk about is the digital camera, the digital photograph. There are 5 orders of magnitude, so that's 5 zeros, more photographs taken in a year today than were ever taken with film photography. So something dramatic happened. And then we saw, once these things were digitized, entire industries grew. We had social media, we had instant messaging, we had all of the things that we take for granted today just didn't exist when we had photographs in film and we got them printed out at the shop and we'd stick them on our wall. So it was actually what happened next that's, I think, the really exciting answer to the question about what's the value proposition. So once we start digitizing rights, I think we are going to see industries emerging around what can I do with these fractional rights? What can I do with collateralization of them? What can I do with the transferability of them? What can I do with the liquidity of them? And these are big questions. Now, That's a little bit future gazing, and it's the proposition. But what we've been focused on is creating valuable, data-rich, meaningful tokens, putting the deal in the token. And so Toko, I was a lawyer, and I looked at tokenization activities, and I was very disappointed with what was happening on the technology front because they weren't putting the deal in the token. They were creating a digital thing, but there was no real information in there. So we've built a data-rich tokenization engine which allows the deal to go into the token. And that then I think is going to enable people to do things they couldn't do. Now we're launching examples. Exciting news for Toko. We've received the first full market licenses as a broker dealer and exchange operator in the new Dubai Virtual Asset Regulatory Authority this week.
That deserves an applause, by the way.
And thank you to my colleague, Christy Schwartz from DLA Piper, who wrote that law, which we've now got a license over.
Stand up, stand up. Okay.
Now, what we're going to be able to do, this is for people in London or from the US or other markets, we can now create digital security interests and sell them to retail investors. No 12-month lockup, no restrictions. There are obviously rules, but this is a fundamental game changer because the promise of this technology from where I started was, how do we democratize finance? How do people with assets that are currently illiquid or that traditional finance isn't servicing play? How do they participate? Well, the technology allows it. The missing piece has been, do the regulators allow it? And what we're now seeing is this regulatory arbitrage beginning to occur. And so projects we're working on next week, I'm not going to name names, but next week we're announcing a tokenized crowdfunding platform for small to medium enterprise size companies in the Middle East to start doing equity tokenized crowdfunding. We're working with a very high-end jeweler around fractional ownership of high-end jewels, you know, $25 million, 5-carat rare yellow diamonds and things of this nature. And giving people exposure to revenue streams, whether they're earnings or capital appreciation rights through tokens. We're working on, obviously, tokenization of things like funds, tokenization of artwork. So really anything. People say, well, what asset classes? You know, property, real estate, we're working on lots of those. It's an obvious use case. These large assets that are hard to buy because you need a lot of money to buy them or a lot of external finance to afford them. Again, fractionalization means people can play in smaller bite sizes. And that's where to me, there's been a regulatory impasse with, oh, well, these things are for professional investors only or institutional investors only. So the technology's allowed the promise and now we're beginning to see the regulatory match up.
Duncan. This is great.
Yeah.
But I'm going to get back to you on the property one, especially around the homeowners.
I got some good ones.
You got a good one too. We're going to stop here.
For me, the benefits in financial services are similar to the benefits in other industries. For me, it's about creating a better user experience and a better outcome for those users, regardless of what industry you're in. So any stakeholder should have a better outcome with tokenization. Specific to financial services and asset management, democratization of finance is like the buzzword or term. I would say it's about taking the opportunities that have historically only been available to the very largest investors out there and making them available to the smallest investors. More and more we see, it's not just the individuals, but I mean even the smaller, what we think of as institutional investors, smaller pension funds, the smaller endowments, they're also out of most of these opportunities, and they ultimately serve individuals at the end of the day. They all have a job to produce the best outcomes for their clients, and tokenization can kind of help with this journey. So private markets is like it's the obvious one. It's the one that most of these groups are out of. So private equity, venture, private debt, hedge funds, things that most investors cannot get exposure to. I think global fund management industry is like $100 trillion, and there's about $10 trillion in private markets. So only 10% of the assets. When you look at the very largest institutional investors, they're pushing, 20, 30, 40% in these markets, which just tells you everybody else is out of the game. And so for us, we see this as a massive opportunity as a business to go and kind of meet that demand. But I would say, everyone talks about democratization. This is one of the few, I think, innovations where everybody wins, and you don't have those private market assets without asset owners in the first place. So there needs to be a benefit for the largest institutional investors who own the real asset owners, the people that own those buildings, people that own the Shard, or all these buildings, or the hedge funds. There needs to be an incentive for them to want to go and tokenize their interests, and there is, because we can now help those people think very differently about the liquidity in their portfolios, right? They have equities, they have bonds, they're super liquid, they can sell them tomorrow. They've got all this, illiquid stuff, the private markets, that they might have to wait years to get their money back on. Now with tokenization, they can think differently about that, and they can generate a higher return, because you tokenize, you fractionalize, there's going to be a premium to those attached to those tokens, no doubt. And that's the benefit to those investors.
Fantastic. And for the audience here, I'm going to pose a little bit more questions, but I'm going to leave a lot of time for you to pose questions. So keep your questions as we continue the discussion. I'm going to talk about home ownership and tokenization, because I heard a great story when we were all together in Sunnyvale. You want to talk about that? That's an example of democratization.
Yeah, it's a great one. So it's a client of ours, Quarter Homes. They're a US-based client. They've devised an alternate form of home financing. Think of it as a replacement form of mortgage. And the motivation, it's a very socially orientated objective behind it, which is home affordability. It is a crisis across the world that seems to be getting worse across the world. And although we all got used to zero interest rates, that apparently those days are over. And so we now have a further wave of issues around home affordability. And we have a lot of exclusion of people from these markets. It's difficult to get a mortgage unless you happen to be a certain demographic and fit the bank's criteria. So there are real issues with home affordability. And this, on the lender side, provides a very different looking co-ownership model with an owner-occupier being able to get a much higher loan. It's much cheaper than either renting or indeed getting a mortgage. And on the other side, it provides investors to act like a bank in some respects. They can become mini lenders across multiple properties in fractional form. So they can lend and get maybe a fixed yield component that represents the equivalent of the mortgage repayment or the loan that's being paid by the owner-occupier, plus also giving them exposure to a capital appreciation right now. The interesting thing for me in this, took us a long time to get into this model, was it isn't just allowing people to play banker directly, which it does. It's actually giving both sides of this a share in the capital appreciation of this asset class that keeps on appreciating. There's not enough of it, and it is the very root cause of the home affordability problem. Now, that doesn't exist. Where can you go today? People would argue we have fractional real estate, it's REITs. I don't buy that. I never hear anyone talk about their REITs with passion or direct engagement. The ability to go in and say, I want exposure to a number of individual properties that I can maybe pick and choose in fractional form. I get a monthly return based on the kind of rent that's being paid. And I'm also getting an index-linked token that representative of the appreciation of assets, maybe in a region or a city or a country or whatever else. Now, it's early days. We've done the first. It's an SEC regulated security token we've done for them in the US, and we're now looking to launch that model again under the new regulatory framework in the Middle East. That to me it's hard to do this. We're disrupting traditional bank finance. We're disrupting land registries. These are economic interest tokens. As they trade, they aren't really trading the ownership of the underlying asset. We may have solved the stamp duty efficiency problem for these investors. How does the land registry feel about that? So there's a lot of interesting disruption elements to this type of model, but it has a great social outcome.
And that's the point here. Great social outcome, and we're seeing a lot of disruption. So there's a lot of opportunity. We're talking about concrete examples here. Now I'm going to move a little bit to a question for you. Well, it's for all of us actually. If you both agree, if I say distributed ledger, you would know what I'm talking about, right? Blockchain, okay. is foundational in this discussion. We're going to say it's foundational. And your focus really, we're talking about decentralized finance, DeFi, okay? I'm going to throw some words. If I say Web3, you know what Web3 is, NFTs, okay. Do you think they're part of the tokenization discussion here? And if so, if you don't agree, so state. And if not, where from your perspective do you see kind of the elements of tokenization? So, when we're talking, do we bundle that together? What from your perspective do you see that? So, 1, blockchain, DLT, part of it, foundational. 2, 3, Web3 NFTs, kind of part of it, not, or other.
Yeah, okay. So I usually want to kind of differentiate between DeFi and on-chain finance, or blockchain, because I think about it as DeFi and CeFi. Mm-hmm. I got baited into a debate on a panel at Paris Blockchain Week about this and realized everybody was talking about completely different things.
That's why we want to clarify here.
So we in on-chain finance, we've got the, let's say, centralized exchanges where we can admit tokens and have them traded between participants. And then we obviously have decentralized exchanges. And I think, look, if you want to do a regulated, at least in the UK, if you want to do regulated assets, it's much more straightforward to go down the CeFi route. You go to an on-chain securities exchange, with Archax and with Toko, but there's clearly an opportunity in CeFi, and there's an opportunity to create liquidity, which is actually going to help this industry scale. So if we can find a way to bring those two together, I think it's really exciting.
Well, that's cool. And Scott, what's your position? I'm going to pick up on you.
Yeah, I want to just extend on that, because we've got an idea. It's a bit out there. It's called a CDEX. Well, that's what I'm calling it. It's a centralized, decentralized exchange. It's a bit like a physical metaverse, I think.
We didn't plan this.
Oh, wait.
I'm here.
Yeah, no, we're in partnership to build it.
Yeah.
No, actually, we are in partnership with some of the great institutions here in London. We're working with UCL and LSE to develop some of the algorithmic market makers that are going to help drive this. The idea is to bring these two worlds together, to bring the idea of an exchange or indeed a marketplace. My concern with exchange infrastructure that's been built for virtual assets is it's assuming the future is going to look like the past. It's assuming everything is going to trade like an Apple share or a Bitcoin. High velocity, traditionally market made, lots and lots of transactions with people trading with themselves, because that's how we close spreads today. That's how markets work today. I'm not sure, that will obviously continue, and there's a role for that. But when we're talking about $600 trillion worth of high quality investable assets that are currently unserviced by public markets, I'm not sure that is the right future for secondary market infrastructure. And so the vision we have around this is to assume lower trading volume, to assume more of a marketplace. Now, you mentioned NFTs. In a way, it's a security token offering for like OpenSea. So an OpenSea, but for security tokens. It's visual, it's pick and choose. And in order to provide liquidity, how do we do that? Well, we're going to try and, working with the academic institutions and some of their quants, we're going to try and build the price on the other side is the algorithm. So, the code will give you a price on the other side. Will that be tight like today? No, it won't. But nor is there a tight pricing on private market stuff today that no one can even find, far less know what the price should be. So it isn't perfect, and I get it, but it's going to be better than what we see today. That's our view. And then bringing in the decentralized component to this, the liquidity for that automated pricing coming from a liquidity pool, which is very much a DeFi construct. Having a liquidity pool that assets can be pulled from, and then people who contribute to that liquidity pool being able to earn from that. So that's our vision around it. I mean, kind of what you talked about, how do we bring the best of these two worlds together? Because I agree, the future of regulated assets isn't going to be fully decentralized. I don't think that's going to happen. So that's our vision. Now, you also mentioned foundational technologies, and it would be wrong, particularly as Lehman Baird, the founder of the and
He's
inventor
sitting
of
in
the,
the back.
Of the hashgraph from Hedera has just walked in. It's important for me to mention it. Foundational technology is really important.
It is.
You know, what are you deploying these assets on? The reason, you know, Abrdn and Toko, DLA Piper and the other council members are here is because we believe in the technology and the governance and some of the other attributes of this particular DLT over others. And that is really important when you're starting to, there was one thing when people were spinning up cryptocurrencies and magicking things out of thin air and all of that. But when you start talking to a client about, can I take your $1 billion piece of commercial prime real estate and entrust it in fractional form to a foundational technology, these questions are much more important. So, you'd mentioned that foundational technology.
No, I love it. And you're hearing a common theme, right? So you're hearing, this is concrete. There's extrapolation to the future. Hello, future. I love that shirt. Love the theme here too. And so this brings me down to kind of a pivot question here, which is extrapolating further, right? What do you see, both of you? Duncan, I'm going to start with you. What do you see, beyond tokenization as a vision? I mean, if you were to, the bigger pieces, you're taking it from what you're doing now to where you want to go. What's the bigger vision from your perspective of where you've set? And then, of course, I'm going to shoot to you.
Where we are, the entire fund management industry, where if anybody's got, pensions or that, you have insurance, the insurers investing in funds, is working off of about like 100-year-old infrastructure. The first open-ended mutual fund was created in 1924. And the only thing that's changed, really, is that layers and layers of complexity have been added, which benefits nobody but the lawyers.
Don't look at me. I got out of that gig. Didn't sit well with me.
And for me, yes, tokenization is super exciting, but there's a future that we can see in fund management, where that fund and all the service providers and all the complexity and the processes, which, by the way, end up at the end of the day will impact your retirement or your wealth. That doesn't exist. Everything exists on chain. Most of these groups are not needed because they're serving a trusted, they're performing a trusted role, and that's not needed on certain public chains. And I can see that happening step by step. We're working towards that, and for most people that's super boring. But for someone in the industry, it's actually really, really exciting.
Well, that's great. And what about you? Because people talk about token economy and so on. They've been talking about this for several years now.
I wasn't a finance person. I was a computer science grad turned tech lawyer, and then I got into this world, and I learnt about more of the financial services, and I kept going through this, is this a joke moment, with a lot of it, because of just the complexity and of all of that layering you were talking about. So there's a lot of efficiencies to be had, and this technology now providing the trust layer that is coming through trusted third parties today, and that's going to be a lot of disruption. But to me, the vision, and it comes from, I'm going to do it from the investor perspective because it's the way I imagine it. My experience trying to talk to IFAs and get support for financial investment is not one that I personally feel very good about. And most people I speak to find the industry seems to consume a fraction of your money quite effectively, and you don't seem to necessarily get much back yourself. What I've seen happen with cryptocurrencies and with NFTs and the froth around this is, it strikes me people want to play. They would probably rather actually make a wrong decision themselves than have somebody else making these decisions for them. So I think there is a desire, and it's almost a human conditioned desire, to want to be in control of some of this rather than being told what to do and what's happening in their REIT or whatever it might be. And so I think engagement of the investor population, and that vision for me is, and this is part of our CDEX vision, is you can go onto a platform. There are asset classes, there's real estate, there's equities, there's this, there's that. whatever else. And you can go in there and you can pick things and you can deploy your capital in there, and it's in tokenized form, and those tokens can then be subsequently traded. And there is a form of liquidity, so there is a price on the other side when you want to exit. And then the next bit, really to touch on the fund manager piece, is this is where AI and other technologies are going to interact with this. Imagine going on there and saying, I haven't actually got time to do this. I did just get my bonus. I've got 10 grand or whatever. I've got 10 grand. I want to, you know, it's the same questions we see from IFAs. I go through the questions. It does an assessment of my risk appetite, the areas and things I'm genuinely interested in. It then maybe does a selection based on what's on there. Here's how we would recommend deploying your 10 grand today across these different asset classes and different fractions based on what you've told us. Do you want it? Press the button.
What do you want it?
Who wants that? I'll speak afterwards.
Okay, that's good. That's good. So we're gonna allow a little more time for the audience, but I want, for the audience here, for our community, what is the one call to action? What's the one thing they should have as a takeaway from this discussion? You know, there's several things to think about. So I'll let you pause for a moment. Duncan, what's the one thing? What do you see as disintermediation happening live here, and the opportunities, the real benefit, the one call that you think is going to be cool for them, for the audience here?
For the audience.
Yeah.
Does anybody care about
well,
putting you
yeah.
on the spot here?
Yeah, no,
Okay.
well, you can say the audience, but also for what you do.
Okay, so well,
Just preface with, this is not financial advice.
Yeah.
In terms of disintermediation, what I spoke about, that the fund model disappearing or changing, right?
Yeah.
Changing. We know already that the incumbent large service providers in the world, like the JP Morgans, the Citi, the State Street, they recognize this.
Yeah,
they feel the threat. They are investing to try and stay relevant. And look, we will see there are going to be new challenger companies who are, you know, digital first, and people will be taking, I don't want to say punts, but they will give them serious consideration. And yeah, the big ones see it as a threat. So maybe you want to start one and hope it gets bought.
I'm going to say I'm personally impressed with what you all are doing at Abrdn. So really impressed.
Yeah, nice.
Kudos to you. And for you, Scott.
Okay, bear with me on this. Web 1, the read-only internet. Yeah, we all went from waiting for the newspaper to be printed or the TV to tell us what news we were going to get today at a certain time of day to being able to pull content. So we all became masters of our own reading and informational access destiny. Web 2, read-write. We could consume information, but we could also contribute. We all became broadcasters. We all became journalists. Yeah. We all became capable of publishing things. Yeah, so that's the information. Web 2 is the information web, and that allowed us to do that. Web 3 is the value web. These tokens are real value. When you send money today on Web 2, you're not sending money, you're sending data. And then lots of money stuff happens underneath. Actually, Web 3, you can put the value in these things and they will move. To me, the big takeaway is we are all about to go from being merely journalists to being capable of being our own asset managers, become micro banks, become our own financiers, and to take assets we have ourselves and to liquidate them or to get fractional participation, to build our own platforms, to collaborate with people we don't know, which is what this trust layer of the internet, which is Web3, is going to allow, so that we can collaborate with people we don't know to build financial markets, platforms, and other things. Now that, to me, is the big takeaway, is Web3 is going to take us from information flows to value flows, and that's going to be very exciting.
This is so cool. This is around democratization, as we started our conversation in the first place, of what this all means to us in terms of tokenization. Now I'm going to open it up to the audience. I am hoping that you are peaking with immense curiosity with questions. So, yes, please state your name.
Yes, James from Neuron.
Okay.
Quick question around assets and the...
Neuron, for those who don't know, on the council, we have some council members here. Neuron is doing incredible stuff around opening up drone corridors so that you can fly beyond the line of sight using Hedera consensus services, a critical part of that infrastructure.
How cool.
Really dabbling in AI as well. Very exciting application. Sorry to interrupt. I'm your pitch man.
That was good.
So assets, whilst providing you returns, can also cause liabilities.
Correct.
So I just wonder, where an asset obviously generates wealth for the owners of those tokens, that's a little bit easier to deal with because you're sending money in their direction. How do you deal with assets that may create a liability? For example, I don't know, a house which you tokenize and you suddenly have a bunch of repairs. How do you organize, 1,000 people to recover that money to cover the liability? And what kind of tools would you use in that kind of circumstance?
Great question. Web3 doesn't solve real world problems. Yeah. So the issue with home repairs exists today, and they're still going to exist. But let me come back to the quarter homes example. Who's living in the home? Because you could have been a landlord. Today you can be a landlord. Guess who has to fix the boiler when it breaks? The landlord. This isn't that anymore. The person living in the house is an owner-occupier. You're just providing them with finance. They fix the house. Now, I'm not saying that's right or wrong, but it's an example of how a tokenized financing solution has transferred the burden of, I want to invest in property, but I don't really want to be a landlord with all that sort of stuff. So that's just an example of a real project we're working on that solves that problem. You're the owner-occupier. We're splitting the capital appreciation because I've loaned some and you're getting some, but I remain on the hook for looking after the home. Now, who looks after a home better, a renter or an owner-occupier? So again, you've got this positive feedback that you've got the sort of person who's going to look after the house, living in the house. Now, that doesn't solve all the problems, but I think it's an interesting example of these new structures actually create a change in the relationships.
You have the same. I mean, today in commercial real estate it exists, right? You have asset owners and operators, and quite often they're not the same group. So it is possible to separate the two, just so that you can separate water rights from land. It's it's the same thing, and where better than on blockchain and through tokens to go and process the payments necessary between the asset owner and the operator to achieve.
So would I be right in thinking that the inland revenue would want to also have tokens involved in all of this? Because who actually creates the capital gain if the landlord is allowing the tenants to prosper in resolving the issue?
Yeah, I mean, so in this case, you're going to want HMRC are going to want to receive payment, and this is where they either have to be comfortable accepting on-chain payments,
are they ready to are they on the same level?
No, no. In the UK, you can't even buy property truly, like the actual building on-chain, right? As in, like, you can buy a building within a trust or a wrapper of some sort, but until land registry goes on chain, that's going to be very difficult.
Get questions? Yes, please.
Daniel from the Building Blocks. Very curious about the panel's thoughts about we spoke a lot about trust. What is the role of trust in technically trustless systems?
Excellent.
I'll give that.
Please, got me stumped that one.
So let me see if I can parse that. In technically trustless systems, such as
tokenized assets.
So the assumption here is that tokenized assets would be trustless.
I don't see.
So I want to get that debate going.
Yeah,
Or other.
I think this is almost an extension of the decentralized versus centralized argument. And my view is that for real world assets, digitized, tokenized security interest, financial instruments, a pure crypto degen view of the world is unlikely to prevail. Similarly, Toko, as an example, is not a pure public chain solution. When you create a Toko asset, we have a bifurcated data structure where some information sits on the public chain, Hedera token, but the issuer can decide to put a lot of that information into a private Hyperledger Fabric environment, which is only accessible to and visible by permissioned, whitelisted, sanctions approved, et cetera, et cetera. So there are some, I think, necessary compromises to the pure trustless Web3 in order for this ecosystem to really take off. I'm hoping that's an answer to your question.
Love it.
Oh, yeah.
Okay.
There you go. Do we have, yes, please, in the back?
Yes, I'm Shannon. I'm from Swift.
Oh.
So my question really is, there are already marketplaces and platforms that currently fractionize and democratize, for instance, access to real estate or private assets.
Yep.
So I guess my question that I've been asking myself for a long time is that what are the real benefits of tokenization? What are the real benefits of putting them onto a blockchain, be it public or private?
That's great.
So presumably I can think of the names you're thinking of, I guess, and you're referring to their, let's say, lack of success.
Yeah.
So far, maybe. They're all early, I would say. First, I think they were bold enough to make first steps in the space. But I think one of the things that's held them back is that they're all quite siloed, and they require.
No, I'm talking about solutions that currently are not on blockchain. They're not even using blockchain.
Oh, you're talking like an iCapital or okay.
There are companies out there they fractionize real estate ownerships, right? So you can be a landlord or a house owner with very little money, right? So when those solutions are already out there, what are the real benefits of putting those on the chain? Like what difference does it make?
I've got a few observations. One is the overwhelming majority of fractional real estate platforms I've seen are illegal, for starters. They're pretending they're not securities and they're not licensed. So that's my first comment. Now, are they going to succeed? No. That's one issue. The second issue I would say is, in order to do legal fractionalized interests today, there are problems with regulations. So I think it's I'm going to use residential real estate because it's easy and you're better at the commercial stuff. But a residential real estate property in the UK, I think you can only have 4 co-owners at Land Registry. There aren't any more boxes to put more names. So that's it. So you can't have more than 4 owners at that level, at the base layer of actual ownership of a real estate asset in the UK. So that doesn't work. Okay, so what do? We go up a layer and we put an SPV code. So the company now owns the property. Okay, well, the company can now issue shares. Okay, great. You can have lots of shares, so we can have lots of co-owners of shares. Great, so a token is now a share in an SPV. That gives me exposure to this asset. And this is a way of doing it, although you tend to get into equity crowdfunding rules, which are restrictive, and there are all of these types of things. Plus, every time a token trades, you're doing a share trade. Now you've got to go back to a company's registry, update the share register, pay the stamp duty. That's a pain. Now, what do I want when I want to buy a piece of a house? What do I really want as an investor? I want exposure to the rental returns or to the yield that's coming off this property, and I want exposure to the capital appreciation. Yeah, I'm getting a monthly return, X% of my capital, and at a point in time it'll be sold and I get the uplift because the thing went up, accepting they don't always go up. But yeah, that's what I want as an investor in real estate. Why do I need to own a share or own the house to achieve that? I don't. My background, I'm a contracts lawyer, I love contracts, completely free to do more or less anything you want. There are a few rules, but you can do anything. Tokens are contractual rights. You can bury these contractual rights in a token and then they can trade. And they don't have to be stuck in a land registry or stuck in a corporate registry. Now, the problem with those, and why haven't we seen these models take off, and I had long conversations with participants in this market and other markets around the world, because these things are securities and the regulations governing securities are not sufficiently clear or free to allow them to happen. What we are seeing is the emergence of frameworks, and thanks very much again to Christy for writing the VARA regs in Dubai, that are making this absolutely possible. Now, that to me is, why haven't these things flourished? Because I don't believe for a moment there aren't asset owners who want to do it, and there aren't investors who want to participate. That's my sense. I could be wrong, in which case I'll have to go and get another job. But that's my view. I think it's the regulatory challenges that TradFi regulation isn't currently allowing this sort of thing to flourish. That's my view.
Do we have one more for one question?
We have one amazing question.
One amazing question. One amazing question.
No pressure.
All right.
This has to be the best question of the night.
One more question.
My question is, obviously we discussed a lot about fractionalized ownership of created assets. But what about when it comes to creating assets? And I'm talking about like large-scale infrastructure projects, which perhaps governments might undertake. Things like in England we have the HS2. It's been a disaster, to be honest.
What a surprise.
Yeah. But would this sort of tokenization, fractional ownership be a potential play to get sort of like your average person, maybe even investing 1,000 and getting some returns on whether it be a toll or a train ticket?
They're called public-private partnerships. What you just described was a real version of a public-private partnership. You know, I think so. Now, we were lucky enough through the Hedera network to have an audience with Baron Nat Wei from the House of Lords yesterday, 2 days ago? 2 days. 2 days ago. It's been a bit of a whirlwind. And he was talking about some of the biggest social challenges on the planet and climate change in particular. And his vision for, I won't go into the details, it was extraordinary, but his vision for how it could be solved. And exactly the same point is, imagine if we allowed impact investment at the level of individuals to participate through tokenized financing to make this a reality. Wow. I mean, that's the stuff that I think this could enable.
You actually have a real example of that now, right? So there's a company called Credit Nature. It's a rewilding company who have received funding from the Scottish government to take Scottish land, raise money through the sale of tokens to go and fund rewilding of that land. So it's a sustainability theme, but it is an infrastructure project, right? Because it's large scale and it's between the government and raising money from the private sector.
With carbon credits involved as well.
Biodiversity credits, but yeah.
So I want to, first of all, I want to thank you, the audience, for posing amazing questions. Great questions. So applaud, really. And I know that the conversation will continue. So thank you so very much. Thank you so very much to my fellow panelists, to Scott, to my Duncan and Abrdn for hosting, and the games are beginning now. It's not just the games. This is beginning. This is real. So, and we talked about something that's really concrete, and we're proud as Hedera to be part of this journey with you. Thank you.